now in this market on zone 2. I hope you understand. We are not taking trade on zone 1. I will teach us on the strategy that we can use to trade on zone 1, but our major focus on this strategy is what we call zone from zone. Hello, you are welcome to today's class. We want to look at in-depth supply and demand. Okay, now on our supply and demand, we know that, let's look at the skeletal drawing to have a proper understanding of it. So this is skeletal drawing of demand, and this particular structure is telling us about a buy market. We can also say this is a bullish or it's an uptrend market. How can we come to that conclusion? You know, when price is making this type of movement, from the down is going up, come down again, and then went up. By the time it comes down, it will give us the previous point that it left. While it was coming down is called the high point. Okay, then while it was going up, the previous point that the price will leave behind is called the low point. Okay, and at that low point, since this is a buy market, at the low point we can look for our valid demand zone. Okay, then if price, we can now expect price to come back to the demand and continue to buy this market. That's just it. Now this is skeletal drawing. Let's see how it appears on the real chart. We can see mostly how the candlestick formation can be formed. This is a previous high point. Price is making different move like this, and then we have our low point here. Price came back up, took out this previous high point, and as such, we can now say this market is a bullish market, it's a buy market, and it's what? It's an uptrend because the previous high point is taken out, a low has formed, price continue to go up. We can now expect this price to come back down to this demand zone that we have identified, and then we can continue to buy this trade. Let's look at the other one. This is for the demand. We want to look for the supply also. The same thing in the skeletal drawing. You know, when price is coming down from the previous point, it will make to go up. We can now say this is a low. Then the previous point it make for it to come down, you can say this is a high. And then at that high point, we can see, if we can identify a valid supply zone there, we can now say this is a sell market, it's a bearish market, it's a what? It's a downtrend. So we can use this statement interchangeably. What I mean is, sometimes I might say this is a selling market, this is a bearish market, it's a downtrend, and when any of these terminology is involved, we are usually looking for our supply zone. So this is how it looks on the real chart. You can see different candlestick formation. Okay, price came down, went up, came down again. Okay, give us a low there, and then as such, this is the previous high point, previous low point, and at that high point, this is now what? Our supply zone that we have identified. So we are looking for price to come back to this previous supply, and then if price come back into it, and then we are expecting price to continue to sell. All right, so now that you have gotten the general knowledge about supply and demand, there's more to this for you to really understand supply and demand very well. I've explained it in my previous videos. This is just a summary of supply and demand and how to identify it. So if you don't know it, you can do more study. It's very easy to know. Now let's go into the main reason of this lecture. The main reason for this lecture is to look for a strategy that can help us to trade supply and demand very effectively. Okay, we want to trade supply and demand effectively. One of the first strategy we can apply is what we call zone from zone. Okay, you know, when we are looking at the charts, we have to first of all identify what the market is doing. In this scenario, this is selling market. How do we know that price is coming downward, went up again, came back down? You know, when it came back down, it took out this low, and then the high point that it left behind, if we can identify that price has given us a valid supply zone there, that is 1, then you can see that from here, price came back into that verified supply zone that you have seen, and then price came back down again, taking this low and this high point that it left behind. We can now see, if we can now see another valid zone there, meaning that this is what we call zone from zone, because the first zone is valid, price went back to tap into it. Okay, now it came back down. When price came back down, this is now, if you see this, and at the time we want to enter trade, if you see this second zone, we can now take this zone, that this is a very valid zone, that we can anticipate price to come back into that zone number 2 and continue to sell, because this is selling market. I hope you understand it. This is now we call zone from zone, which is to say this is the first zone, and this is the second zone. So this second zone is coming from zone 1, that is valid. Then in retrospect, or how will I put it, by so doing, we can say, okay, this is an assurance, something that can give us more confidence that this zone 2 is going to be profitable. The probability of it working out is not very high compared to if we just look at if we just want to enter trade at zone 1. But now that zone 1 has given birth to zone 2, we can anticipate that price can go back to zone 2 and continue to sell this market. Okay, now let's look at that. How can we apply what we have just learned, zone from zone, from on our reach chart? Now when we have learned about zone from zone, what I usually do is I usually use 3 major time frames to look at the market. I'll start from the weekly, then go down to the daily, and I majorly enter my trade on the 4-hour time frame. So this market, I don't want to waste our time on it. I've already analyzed it. I just want to use this as an example. This is US, okay, this is US 2000. All right, you can see that on the different markets. This strategy can work on different markets, just for us to identify our zone from zone. Now in the scenario here, we can see this is a previous high, a previous low, then price took out that previous high point. Then by so doing, price give us, this is a very valid supply zone. Okay, when price give us that supply zone, this is what we call zone 1. Let me write it there, zone 1. So this is our zone 1. And how can we identify this our zone 1? Because this is a valid bearish, this is a valid evening star candlestick formation. Then after that, price has done that, this and then price took out the previous low, okay, of this particular pattern. After price did that, price went back again to this zone 1 and they came back down. So we now have a high number 1, high number 2, low number 1, low number 2. Then when price have done that, this, we can now say this is our zone 2. Okay, this is our zone 2 in the supply zone, because this is selling market, zone 2. When we have identified our zone 2, and zone 1 has produced zone 2, we can now expect price to come back into the zone 2. Then we set our limit order on zone 2 like this. Okay, and usually, what I usually do, I usually target 1 to 3. That's what I usually trade, 1 to 3 risk to reward. Okay, we can target 1 to 2, but I usually go for 1 to 3 risk to reward. Now in this market, on zone 2, I hope you understand, we are not taking trade on zone 1. I will teach us on the strategy that we can use to trade on zone 1, but our major focus on this strategy is what we call zone from zone. So zone 1 produce zone 2, then we can now anticipate price to come back to zone 2. In a limit order, we can set a limit order here, a sell limit, okay, and then we want price to come back. As you can see, price came back into zone 2 and continue to give us this trading profit. And you can see what happened. This was a very beautiful 1 to 3 risk to reward. I hope you see it. So with this, it's a very nice strategy. You can go to your chart, and it works on all time frame, but I usually recommend that you should not go lower more than the 4-hour time frame. Okay, less than the 4-hour time frame, or 1-hour time frame, if at all. If you must go on the lower time frame, maybe 15 minutes, 30 minutes, 1 hour, 4 hours, so on and so forth. But the more lower time frame you go, the less effective this strategy will be. I hope you understand. So I usually trade this strategy on the 4-hour or the daily time frame. If I see an entry there, my weekly time frame will just be for conference purpose. We'll get more on that later. I hope you understand this. On subsequent videos, I will be making more examples about this different strategy you want to be looking at on this our supply and demand session of this price action. So that is it. For a video not to be too long, please understand it. More examples like this, you will get more understanding about this particular zone from zone strategy. It's all right. Thank you.